Well, good morning, everyone. Welcome to our Friday morning trading room. Well, those of you who have the advantage of trading the night session would have had a field day last night as the market made a tremendous move going into yesterday's close. Just a huge rally. And that continued all through the night. So we have a huge 30 or 40 point gap to start the day. Huge. I think that the trend is obvious, or looks obvious right now. The markets do have a tendency to try to reverse overnight trends, however, off of the open. So we'll see how that plays out. But I don't know. I'm a little afraid I may be sitting on my hands here for a while. Until I can get a handle on what's going on. The hawk, you can see, starting to get a little bit bearish. The falcon actually producing a trend change signal, and that means the raptor is going to try to produce a counter trend signal as well. This now our test of the overnight extreme. This technically a number 2 signal. That's the counter trend signal. It did not print because the system parameters were not quite met, but it is a number 2 signal all the same. Target for the counter trend signal, of course, the hard edge of the trading band. And like I said, if you're inclined, the markets do try to reverse overnight trends most of the time. The hawk now going to work a first micro-macro cross signal. So a few things lining up in favor of a short move or a short-term short move. We're still trying to get our bearings here, I think. And now the raptor actually coming back with a trend signal. Although this technically did not touch the hard edge, that is close enough that you can consider this to be a hard edge bounce, and now you've got a number 3 signal. So we've got a number 2 to short, we've got a number 3 to buy. We're getting a second push opportunity. If you wanted, you could even bracket these ranges. You could look to buy above the high and sell below the low. Now maybe I'll wait for the market to actually trade a tick lower. To confirm that, in fact, this will be the swing high. Notice when I'm using the OCO order, I'm not using the boxes down here. Come on. There we go. Okay, so now we can set our buy order there. So now we've got essentially a little bit of a bracket type formation. And if we have our stops enabled, we'll even get a trailing stop. And now you can see the Raptor programming officially giving us another number 2 signal. This, by the way, very, very ambitious. The market, you know, huge uptrend. Still very early. We're only 6-7 minutes into the session. Okay, a couple hawk questions here. Russell says, my hawk chart does not match yours. Have you reloaded historical this morning? No, I did not, but I can. And once that's done, I'll get to Marlene's question here on the hawk. Oh, nuts. I didn't want it to reload the... Oh, well. I didn't think it would do that, but let's place our orders again. So there you go, a little note to self. If you reload your historical data for a particular market, it reloads all the historical data for that particular market, whether your charts are linked or not. I thought it would only do it on the linked charts. Marlene asks, would all those yellow bars on the hawk make you leery? Well, yes and no. Yellow bars show a trend, show a neutral market, and they always occur when the market makes a transition. So if I roll all the way back here, so when the market goes from bullish to bearish, there's going to be yellow bars. I'm trying to find where it went from bearish to bullish, but okay, here we go. We're going from bearish to bullish. There's going to be yellow bars. Somewhere after this, however, you're going to get that first micro-macro cross signal. So I would not entertain signals produced by the yellow bars. However, that first micro-macro cross is certainly an inviting signal. So here we have a first micro-macro cross. It is counter trend, which pretty much means you're going to have to place your stops above the overnight highs. Because it is counter trend, I would probably not risk my full amount. Rather, I would reduce the risk exposure. Maybe take a single contract. If you're running a break-even trigger, at around 70–80%, you probably would have tagged your break even. Otherwise, you got a little bit more weighting going on here. Trend trumps everything. What I mean by that is if you have a market that is in an obvious trend, excuse me here for a second while I get my stops enabled again. If you have a market which is in an obvious trend, you're always going to do better staying with that trend. As unlikely as it may seem at times. So, 1 second here. I don't know why I just don't leave a daily chart up. It seems I'm building one every day. Okay, so here's the NASDAQ for today. And this was the NASDAQ as of yesterday. So if you looked at this chart, sorry. There we go. So if you looked at this chart, you may be inclined to say that the market is in an uptrend, and you could even shoot your trend lines across here like so and so, and I think everybody is expecting the market to consolidate, as it seems to be consolidating, but for the most part, we are in an uptrend, aren't we? So what does that mean? Well, that means you're probably going to have more success buying the market than you are selling the market. So if you are unsure of anything else, you can just look at buy signals. Right? And then you're going to be on the right side of the market more often than not. Now, most of this came through the overnight. This isn't fair, but it proves the point. Back here, the market obviously in an uptrend. At this time, these highs were the big deal because last time the market got to those highs, we saw a major reversal. So you would probably be expecting a reaction, especially after the market went sideways for a week. But even here, you would probably do okay just buying the market. Why do I say that? Well, the market opened here and had at least a rally through here, fell off, and then closed here somewhere. So that means that there was some buying to take it to here, and there was some buying to take it from the low to here. Overall, the day was bearish, because it closed lower than it opened, but there were still buying opportunities. Buying opportunities here, buying opportunities here, buying opportunities here, buying opportunities here. This day, maybe not so much. Buying opportunities here, buying opportunities here, buying opportunities here, and here. This day, you probably would have sat on your hands for most of the day because there was a big sell-off. Not many opportunities for the buyers, but look, the next couple of days, next couple, 3-4 days, you would have got it all back. Same thing here. Not a good day for the buyers, but this day, all just fine. So this is what I mean. If you have a bias or no bias, look at a longer term chart. Look at an hourly, look at a daily, even look at a weekly, and try to stay with that as much as you can. Oh, I guess I better start getting serious about my stops here. So this is why the buy signal was preferable to a sell signal. And likewise here on your hawk. Would I be turned off because of the yellow bars? No, but I would be turned off by selling into such a strong uptrend. That's why I would reduce my risk. I would probably get a little quick with my stops. Hey, way to go, Marlene. Marlene says I grabbed that number 3 signal on the Raptor. Good for you. That number 3 signal pretty much producing at the top end of the trading range we were looking at. Now we're getting a little bit of a pullback. And hopefully they're not going to look too far behind. I've said it before, but you can't trade in a vacuum. You have to consider the context. You have to consider everything that came before, not just the last 3 or 4 or 5 bars on your chart. You can't, well, I suppose you can, but it's very difficult to trade that way. Okay, we're looking now at a retest after the breakout. I'm going to allow the parabolics to roll my stops, even though I may get tagged prematurely here. We'll see. Yep. All right, that's okay. We'll see now whether the buyers can actually hold on to the trend. Or if we're going to get another failure, another sell attempt. Oh, looks like they are. They're giving us a good retest here. So if it fails at this point, we could oh, darn it. Looks like I just got tagged by the parabolics. All right, that was unfortunate. Looks like my stops were maybe a little bit too tight with the parabolics. Let's see how the ATR would have handled it. No, I would have got tagged on the ATR. Maybe I need to adjust that a little bit. No, would have got stopped on that as well. So that little dip was just a little bit too much for me. The Raptor, of course, did give me a follow-up signal that I could have attempted. Hey, way to go, Frank. Frank says, I traded 3 cars on that trade for $390. Good job. Marlene says there was also a late filter on the Falcon and a micro-macro cross on the Hawk. You're absolutely correct, Marlene. The first micro-macro cross coming very early. We also had a macro pullback, so we had another chance to get in just on this last leg up. And let's take a look at that late filter entry. Good job. Yeah, you caught that one right on. So the late filter entry, once again, occurs when on your Falcon, your filter goes out of sync, comes back into sync, your trend line never changes color, and you produce a signal. Very high probability signal, as you can see. Just great move there. Yes. I see. Marlene says, sorry, meant macro pullback, but it's not that you got the name of the trade right. I get the names wrong all the time, but that you identified the trade. Now, the macro pullback occurs when you see the market pull back to the macro line. That's where it gets its name from. The micro line goes out of sync. It's the only thing that goes out of sync. Everything else stays in sync. I was wondering whether Mark took that late filter entry trade. I should have known better. Mark says took that late filter entry with 3 contracts, got a better fill below the signal line and picked up 485. Mark says the late filter entry is his favorite. It is very reliable. And if you don't believe me, just scroll through the chart and find them yourselves. It's good practice. And you'll see that they almost always at least find their high probability profit objective, and very often will go much further. What a late filter entry signal shows you is that you've got a shift in momentum. You've got a lot of selling going on, or attempted selling, and then the buyers taking the market back. What this essentially does is it does what is referred to as trapping traders. Trapping traders is a great way to trade, but it can be difficult to spot at times. What it means when you trap traders is we've caught a lot of short sellers on the wrong side of the market. You may have heard of this as a short squeeze. So you've got all this selling going on. Well, where are their stop loss orders? Well, their stop loss orders are just above this swing high or very nearby. So when they get stopped out, all of a sudden all these stop loss orders become buy orders, right? And so you get a lot of buying going on, not to mention all the buyers who bought on the breakout. So that gives you a little extra boost. Yes, Mark makes a good comment here. When the trend line goes flat or flatter, it tends to have better follow through. Occasionally you're going to find trend lines like this that are a little steeper. They'll still work out, but a lot of times you can get sweaty palms if the market's hesitating a little bit. Let me see if I can find you another one. But there are times where the trend line will go almost dead flat, and you'll get a late filter entry signal, and you can just see the follow through on that. This one flipped over, but it still has that same idea. Technically, this is no longer a late filter entry because the trend line went out of sync. All right, just one more, if I can find one. Here's one. The trend line's got a little bit of a slope, but sometimes you'll see it go almost dead flat, and you're thinking for sure it's going to change color, but it doesn't. Now, late filter entries, I should point out as well, they're reliable signals, but you just don't want to see too many of them. Remember what I told you, how they display a shift in momentum? So during this late filter entry here, we've got sellers loading up. We got a lot of sellers trying to sell the market. So they tried it down here, they failed. They're loading up here again. So late filter entries are reliable, but you don't want to see late filter entry, late filter entry, late filter entry. The first one, yes, get all over it. Second one, it has possibilities. Third one, I probably wouldn't even take it. Or if I did take it, I would just take it with a single contract, maybe a tighter stop. Yeah, like Marlene says, another macro pullback would be 2, and that would be the max you would take. See, it's true for the hawk as well. So you got a couple macro pullbacks. You usually only see 2 within a trend, sometimes 3. On insanely strong rallies, you'll get 4, and I think one time I saw as many as 6. But it's the more they print, the less reliable they become, because once again, they show you shifting momentum. See, this macro pullback worked out. This macro pullback went into yellow bars and even into red bars. Well, what does that tell you? It tells you that the sellers are really trying hard to knock the buyers down here. Will they succeed? Well, we don't know. They might. We'll have to keep watching. Like I said, when in doubt, stay with the trend side. If you can't figure anything else out and there's a trend, stay with the trend side. I don't have the news on while I'm trading, but maybe I should because the euro dollar just lit up. And I don't know what's behind that. The Nasdaq's got loads of volatility to it today. Dan says it's the revised U of M consumer sentiment. That's a huge revision. Somebody really got their numbers wrong. Somebody put a decimal place in the wrong spot, because this is very strong. All right, going back just for demonstration purposes. Oh, I thought I was going to get a buy signal. Okay, here's a buy signal. There's no good place for me to cover this trade. This makes it a little bit of a problem, but we'll take it for the demo room anyhow. So I said, if nothing else, stay with trend. Right? Ideally, we should risk the trade at least back to the hard edge. Believe it or not, the best stop is below the low of the morning, way down here. But let's just see how the market responds if we just buy in with trend. Sometimes picking the direction is not as difficult as figuring out where your stop should go. That's very often the tough part. Hey, way to go, Mark. Mark says, I took that second late filter entry. That would be this one right here. And after taking heat, it worked out. I'm up 9-10 on 2 trades and I'm done. Good job, Mark. It's Friday after all, and anything can happen from here. The reason I point it out is, well, partly to encourage you guys. It's not just me telling you this, but this is why I appreciate when everybody, shares their stories. And even if you have a bad trade, you can say, hey, Eric, I took this trade and it didn't work out. Why? What did I do wrong? Maybe we can nail it down if it's nothing obvious, if you can't see it for yourself. But at any rate, what I wanted to point out here is how Mark just takes the signal regardless. It's mechanical with him. He gets the signal. The market conditions may not look ideal. Everybody at this stage is wondering, how much higher can the market possibly go? Everybody's got to be hemming and hawing and sitting on the fence. But Mark gets the signal. He can afford the risk. He takes the trade. Simple as that. And that's what trading boils down to. This is why a lot of times I'll tell you the ability to make a decision is more important than being right. Because the way most people trade is they'll sit on the fence, and I know this from experience because I've done enough coaching with people. Well, they'll say, oh, darn it, I should have taken the trade. Oh, good. Oh, it's a good thing it's moving against me. I'm glad I didn't get into that market. Oops. I'm glad I didn't get into that market. Oh, I was right. Oh, no, it's starting to go in my favor again. Maybe I should have taken it. Oh, do you think maybe I should have got in? And then, of course, the move is done. That's how most people trade. And then they'll say, oh, well, I guess I'll buy in now. And then what happens? Right? That's how most people trade. It's almost as though sometimes the worst looking trades have the best follow through. There would be people who would disagree with me on that. There would be people who say, no, if the trade doesn't look good, don't take it. And I suppose you have to have a little bit of screen time under your belt before you can say stuff like that. But for the new trader, it's very often the trade that you feel in your gut. You get that knot in your gut and you say, oh, I don't know if I should take this. Like here's a 4-arrow consolidation. It's a sideways 4-arrow consolidation. And you're looking at this and you're thinking, no, the market can't possibly go any higher. Well, that's usually the time the market goes higher. A good trading friend of mine always used to say, the big money is on the surprise side. So whatever side you're thinking is probably not the surprise side. Marlene's asking, what are your data settings for the Raptor? Mine looks slightly different. Well, you're going to have to wait for the trade here to settle, Marlene, but I haven't changed anything. I do believe, because I got the support and resistance suite on here, I'll have at least 10 days of data loaded. I probably have 20 or maybe more. Other than that, everything is at the defaults. Oh, maybe it won't screw up my trade. Oh no, okay, there you go, 10 days of data. Default 24/5 is my session template. Samantha says, that was me before Eric. You just described it. I think you meant where I was describing how you're always nervous about taking the trade, and you know, by the time you finally get in or make a decision to get in, that's when the market reverses on you. Mark makes the comment, I started out the way you described 4 years ago. After lots of sim and only taking high probability trades, I finally developed the confidence to react when the opportunity presented. Put in the practice and it will pay off. And I think that's great advice from Mark. Here's somebody who's done it. Somebody who has learned to develop the confidence in the signals, to trade the signal, to control his risk, to maximize his profits. Like that's how it's done. And unfortunately, there's not a shortcut for this kind of thing, but that's true for anything in life. Anything that you want to get good at. You know, whether it's playing a musical instrument or even baking a good chocolate chip cookie, it takes practice. And this is no different than any other craft. This is your craft now. You are just like a craftsman working in wood, or a sculptor or a potter working with their materials. You're a trading artist. I suppose I should have actually tried to run this one out a little bit just to see how far we could go on that. Just pick a with trend trade, but I'll mark it here. So we got in right there. And let's say we'll stay with the ATR stop. And let's just see how far the market might take us. Oh, I know what I'll do. So we got in there, and my initial stop was down here somewhere. Some interesting comments here. Marlene says, I practiced revenge trading and overtrading for almost 8 years. We all get, I can speak from personal experience here too, where we all get that tendency where we want to do that revenge trading. Turn your computer on sim and just get it out of your system. Don't do it with real money. But it'll be interesting to see how often that revenge trading actually fails. I'm so glad. A lot of times people ask, why did you get rid of the reverse order on the trade manager? Because there used to be a reverse button here. Well, reverse orders are the epitome of revenge trading. They're the pinnacle. Where you just keep reversing on your order because you think you're on the wrong side of the trade. Scott was asking here about the 24/5 template. The session template set to 24/5 was a big issue I had. that kept my Raptor from marking correctly. The 24/7 template, there's a few hours early Sunday morning where the Globex market, the electronic market, is open for trading. So if you set your template at 24/7, the Raptor's gonna figure in those couple extra hours. Personally, I don't think it's worth having that information. So 24/5 is what the programmers recommend, and that's what I've always used. So thanks for mentioning that, Scott. Oh, way to go, Scott says. Indicator warehouse hung with me and we got it figured out. Yeah, sometimes it's just something as simple as that. If your Raptor is not looking quite like mine, occasionally there can be a slight discrepancy in the data. Your actual data provider may be a tick or a couple of milliseconds off from mine. It's not to say that mine is right. Yours may be more accurate. Yeah, Mark says today's a picture-perfect trend day. And I guarantee you, at all these hesitations, everybody's thinking, no, the market can't go higher. No, 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 the market can't go higher. Let's sell it. Let's short it. And this was just a blind buy. Right? I'd missed the number 3 signal back here. Rather than throw up my hands in frustration and say, oh, wow, I blew it today, I know the market's in an uptrend. The Raptor produced a signal. This is what we would call one of those discretionary signals. I take the discretionary signal. I hit my profit objective, but look how much extra I could be riding this trade for had I moved my profit target. It's just interesting to see. We'll stay with this a little bit today and see how much further we can get it. Okay. So Stephen's asking the first Falcon trend change was a loser. I took it and lost. All right. So why did this trade not work out? Now, it's not all your trades are going to work out. I know I'm stating the obvious, but a lot of times people need to be reminded of that because sometimes they think they're doing something wrong. There's a couple of things going on here. First off, you're only a minute or two in the session, so it's still very, very early. And I know I said that sometimes or very often the market will try to reverse an overnight trend. So we have an obvious overnight trend here. It is counter trend, however, and counter trend trades are a trade-off. What happens with a counter trend trade is you get a lower probability of success for less risk. So the counter trend trade gives you the ability to take the trade, and you know where the stop needs to go. The stop needs to go above the swing high. So you can take the trade and risk $200 on it, which is frankly relatively small. But the trade-off is the probability that the trade is going to work out is probably going to only be like 40%, 30, 40%. So here the market comes down, brings you in, and then promptly, well, it made another push lower. So you did have an opportunity to roll your stop at least once, but it didn't get any lower than that, and then ended up reversing and going the other way. So that's always an issue with a counter trend trade when you try a counter trend signal. For me personally, I'm not a fan of early signals. I know, Russell pointed out the eagle, first in sync eagle signal of the day, and I think he's still doing it, and he probably is having fantastic success with it today. But for me personally, the way I'm wired, I have a hard time taking an early signal. It's not that I won't, but a lot of times I need to see the market give me a little bit more structure first. I like to see which way the market is leaning. Are they a little bit more bullish or a little bit more bearish? But it's something to bear in mind every time you look at a possible counter trend signal. Here was another one. Here, we'll delete this for a moment. Here was another counter trend signal. All the signal parameters are met. We have a test of the extreme. The Raptor says all the signal parameters are here to sell. Well, once again, the trade-off is we have a lower probability of success in exchange for small risk. The risk dollar amount, and I almost always recommend just taking a single contract on a counter trend trade. You don't want to load up on a counter trend position. Oops. Oh, I guess it worked out about the same. You don't want to load up on a counter trend trade because of the lower probability of success. Somewhere through here, the market will reverse. Somewhere through here, we will get another number 2 signal and the market will eventually drift back here to the hard edge. That will happen. And we're almost an hour into the session, so it may happen sooner than later. But that's why I was kind of pointing out this signal here and the overall trend. If there's an obvious trend, and you can set up a trade so that you can afford the risk, just stay with the trend. Ideally even on a pullback versus a breakout. You will find yourself on the right side of the trading equation more often than not if you do that. Oh, Dan says, I just had a bout of such revenge trading in the pound US dollar pair this morning. I just take the loss now and call it a day. Well, and you know, it is a part of trading. You can't get bent out of shape over a losing trade. So long as you have two reasons for taking the trade. If you're just kind of shooting from the hip and trading for buying or selling for no good reason, well, then you may as well head off to the casino. You'll probably have a little bit more fun with your money. Marlene's asking, is the 24/5 session for the Raptor only? No, I have all the tools on a 24/5 template. Now, if you have it on a 24/7, it's not that big a deal, but it will incorporate a little bit more data, that early Sunday morning data, into the calculations. So that can skew some of the data slightly. Dan's asking, what is the probability of the discretionary signals and the profit targets? Well, the profit targets don't change. The profit targets are based on the tool, namely the scalper. We have a $50 per contract target. That's a traditional scalp target. The Falcon and the Raptor, we're both looking at $100, and the Eagle, we're looking at $200. Regarding the probability of the discretionary signals, I would say so long as they're with trend, you're probably looking like a 60-40. Well, no, probably even better than that. Probably like a 70-30 chance. I'll demo another one here in a moment. Let's just blindly buy the next buy signal. So we'll wait here for the Raptor. The next buy signal, I think we can all agree the market is in an uptrend. So the next buy signal, let's just blindly buy it and see what happens. That's always a great way to figure these things out. Stephen, your comment here sums up exactly what most traders experience. He said, yes, but the market was so high I figured it must drop a bit, and it hasn't. Yeah, Stephen says, we shouldn't call it the trend change signal because the trend didn't change. Oh, Anthony's taking a bearish stance here. He's looking for a sell-off in the NASDAQ all the way down to 6120, pretty much back to the low of the morning. It's certainly possible. You know, I bet if we shot a trend line across some of these bigger lows, it would bring us in around 6120. Or that's actually the gap, isn't it? That's where the market started this morning. So that would be the gap. All right, Stephen saying here, okay, so the Falcon is printing, but your logic just described, we would never take the Falcon because there is always a trend behind it. All right. The only thing about a trend is that it will end, right? It's like death and taxes, you know, a trend will end at some time. It's not to say that all counter trend or trend change signals are not valid, rather that you should be, well, I don't want to say selective. It's not like, Steve, you weren't selective about the trade this morning. This was a viable attempt to short, and you shouldn't beat yourself up because the market went the other way. You weren't the only one selling. How do I know that? Well, because, see, traders tried to sell it here, and then they tried to sell it here again. So there was a lot of active selling going on. There were a lot of traders who were thinking, just like you were, that the market's going to try to reverse the overnight. But as it happened, it didn't. In fact, there was some more last-ditch selling right here before the market finally established or continued the overnight trend. We've got the same thing going on now. We've got traders saying, okay, you know, we're an hour in, let's take some profit, because don't forget, if you're an institution and you're looking at the overnight and you're buying off of the open, expecting the overnight trend to continue, you may be long 1,000 contracts, right? So let's say you're an institutional trader and you are long out of the open. Where is your stop? Well, I guarantee you your stop is not here. In fact, let's make this a little bit more realistic. Let's say you're getting long 1,000 contracts off the open. You got to buy in slowly because otherwise you'll spike the market. But realistically, your stop's probably down here. So you've got almost $2 million at stake. All right. So now the market's put in this tremendous rally. You're looking really good to your bosses, but you're thinking, I got $2 million on the table. I better reduce my risk exposure. So how do they do that? Well, I know you know how we do it. We take our stop from down here and we start rolling our stop up, right? We'll bring it up to break even. We'll bring it up to the morning gap. We'll do something. Institutions, however, because they have such deep pockets, don't always do that. Rather, what they will do is they will reduce their holdings. So rather than have 1,000 contracts, maybe they'll take profit on 500. So the risk goes down from 2 million to 1 million. That profit taking can cause this. That's why you get these pullbacks, and traditionally that happens about an hour in. So here we are, we're an hour in, and we get a little bit of profit taking going on. So here we are now with our Falcon signal. Well, we're an hour in. We know the market may try to do a little profit taking. It might see a little reverse here to the short side. Is it an ideal setup? What do we normally look for before a market makes a reversal? It isn't just a trend change on the tool. What do we usually look for? Yeah, there you go. You guys got it. A test. We're looking for a retest. We don't have a real retest here yet, do we? So the chances that the market will retest the highs are probably pretty good. Does that mean I just ignore the signal entirely? Well, you could. Excuse me. You could, in favor of waiting for the retest. Remember, we're not looking to take every signal. We're looking to pick our battles. Right? If we're looking to trade 2, 3, maybe 4 times a day. So if you get a signal and you're thinking, well, I don't know, then it's probably one you want to pass. But let's say we took this anyways. Eric says, I get the trade-off. I get the lower risk, dollar risk amount for a lower probability trade. So I'm going to go all in, all out. I'm only going to take one contract. Knowing full well that the market may end up reversing on me. That's why my stop needs to go above the high. Okay, so I'm brought in, and now we're floundering a little bit. So the market is attempting to retest. It's also trying to head lower. If this bar finishes low, at that point, I would probably take my stop and bring it in. Okay, so the bar finished low. I bring my stop in. So now instead of 250 at risk, I've got 100, 125. Depending how aggressive I want to be on this trade, I could even start rolling my stops down and only give them the 1 bar. Why would I do that? Well, the sellers have recommitted to the trade. This was the initial move. They've recommitted to the trade. If they can't pull it off, if they lose their grip and the buyers move the market back, the buyers are going to try to take out this last swing high, right? So with that sort of logic, I may as well take the early stop out. If the sellers win and push the market below this swing low, well, then it's almost certain we're going to hit our profit objective. But at the very least, I could still leave my stops up here, have about $100, $120 at risk, and give the trade a slightly higher probability of working out. But you can see if I had my stop down here, I would have been stopped out, and it probably would have cost, I don't know, $50, $60, something like that. Was it worth trying for 50 bucks? Absolutely, it was worth trying. Now, let's say here's our trade, and here's our signal, our trend change signal, and the market does one of these and produces another signal here. We're going to pretend for a moment the trend line didn't change color, or all the parameters are met for another trend change signal. What do we think about this signal? Do we think maybe that's a better signal? Yep, it is. It's a much better signal. Why? Because now we've seen the buyers try to recover the trend and fail. They haven't been able to do it. And the Falcon or Raptor or Hawk or whatever you're looking at says, time to sell. We got a sell signal. Let's get on board here. Oop, wrong tool. Let's get on board here and start selling. We're producing a sell signal. Let's go. Okay. Let's go. Let's give it a whirl. Does that mean it is less? Well, I suppose in a way it is less risky, but it is still a counter trend signal. You still get that trade-off, right? You still get the lower risk amount for the lower probability trade. You get fewer dollars at risk in exchange for a lower probability trade. Because don't forget, there's always somebody on the other side of the trading equation. If somebody's going to take your short position, if somebody's going to buy your short position, they're not going to offer you high probability, a high degree of success to do that. I know it can all become very esoteric and can give you a headache if you think about it for too long. And that's a good point too. Mark is counting the legs on the move. He says we've had 3 legs up, so maybe a counter trend is due. And yeah, maybe it is. Like I said, somewhere through here, somewhere through the day, we will get a pullback, at least to the hard edge. I would be more confident doing it off of a slightly better retest. Okay, Anthony is asking here about the trend line. Excuse me. So Anthony says your moving average is red. The trend already changed to go downtrend. I'm confused. Okay. With the Falcon, the Hawk, the Eagle, and the Raptor, we have certain setups that we look for. The trend change signal occurs when the trend line changes color, and it usually changes color on a move lower, or in the reverse is true. When the trend line goes from red to green, we have that move higher. After that move lower, we're going to get a pushback. If that pushback fails, the new trend will signal in the new direction. This is what we refer to as a trend change signal. Now, technically, you're correct. The trend officially changes from bullish to bearish at this point right here. However, this is the first signal that meets the criteria for a trend change. Namely, we see the trend that changed the trend line, we see the pushback, and then we see the new trend signal. Likewise here, the trend line was red for just a few bars, but there's the trend that changed it back to green, there's the pushback, and here's the trend confirming the new direction. This is your trend change signal. This is not your trend change signal down here. You do not, although I have had people try this and they were successful for a while. I've never done it myself. I never heard back from them to know whether or not this really works this way, but I have had people who have tried to buy and sell the market as soon as that trend line changed color. So this would be the first bar that completes after the trend changes. So they would be short here. This would be the first bar that completes after the trend changes, so they would be long from here. Now I should point out, in a trending market, all these things will work just fine. But when you hit those periods when the market is moving back and forth, you could end up in a little bit of trouble. So here's the trend, the signal to the short side, here's the signal to the long side, here's the signal to the short side, and you can see how this whippiness gets you in and out, in and out, in and out. If you're just trading the trend change itself. But while you are correct that the downtrend or the market got more bearish at this point, the signal is not until here. Okay, Anthony said that's a first signal indication. You said you don't respond to the first indication. That's early in the day, not in the signal itself. Some of our best signals are the first signal that prints. So for instance, I gotta scroll back here a little bit. Okay, so here with the Falcon, here is the first signal, what we refer to as the trend change signal. This is a very reliable signal. Here on the Hawk, we have the first micro-macro cross signal, a very high probability signal. So no, the first signal is definitely a signal I look at, because it tends to be a very high probability signal. The first signal of the morning, however, for me personally, and I do mean me personally, because there are people in the room who have no trouble taking the first signal. I've known a lot of people who can take the first signal. But for me, I'm much more comfortable. I've said this before too. If I hosted a trading room, it would probably start a half an hour into the session. It wouldn't start off the open. If I had my way, we wouldn't be meeting off of the open. We'd be meeting about a half an hour in. But then everybody would say, well, why aren't we meeting on the open? Because for me, the first signal off of the open is not very predictable. Or the way I'm wired, I don't trust that early signal. So here's the first micro macro cross. We're only 7-8 minutes into the session. Yes, it's a high probability signal. I don't know, did it hit its profit objective? Nope, not quite. And then it reversed and went the other way. So the first signal of the day, yes, I'm a little bit leery. The first signal that meets our high probability criteria, no, I'm all over that. So I hope that clears that up a little bit. Yeah, Mark asks an off-topic question. Whatever happened to Jim? He used to trade the YM. I miss his commentary he used to give us. I think he was on the advanced decline or something like that. Just curious if you ever hear from him. No, I haven't. And it's funny you should mention that because I was wondering the same thing. He was a very prolific poster in the room. He would always give the advanced decline values. For those of you unfamiliar with the advanced decline stuff, it's somebody actually decided to start tracking how many shares were going up on the New York Stock Exchange versus how many were going down. And then based on that, they would try to get a bias on the day. Normally, people look at the difference between the two, and you can build your own advanced decline chart on Ninja, if that's something you would like to follow. All right, well, we're drifting now into a lot of yellow bars here on the Hawk, so that's kind of suggesting the trend is weakening somewhat. The Raptor also giving us a lot of yellow bars. Yeah, maybe. Mark says maybe he made his millions and retired to his own island somewhere. It's entirely possible. He bought the island next door to Richard Branson. Well, that might have been the move of the day right there. Oh, Marlene says Branson Island got blown away in the hurricane. Yeah, that was a bad one, or bad set of hurricanes this year. I don't know, do they have power back in Puerto Rico yet? Last I heard there were still places without electricity, which is crazy. Oh, yeah, Marlene says Puerto Rico's still in bad shape. Yeah, I'm with you, Steven. Steven says, I don't want my own island, but a lot of rich people have retired to Bermuda. Bermuda is a beautiful spot. Steven says, Peter Lynch and Michael Douglas live there. Oh, good. We can have drinks. Maybe play a round of golf. All right. Well, we're definitely in consolidation mode now. Definitely stuck sideways. Well, here we are, the top of the hour, and I think that is that for today. We will eventually see a breakout from this sideways range, but you know what? Given how far the market has moved through the overnight and today, I think we're not. I doubt we would see a dramatic pullback. A little bit of a pullback, sure, as there's likely to be some profit taking going on. Dramatic pullback, probably not so much. There may be one more trade in here, but I think for Friday, we've probably seen enough. Okay, Rick is asking, how how can I not be confused when looking at the top of the market before it reverses, I see a marker, but the market goes short and there is no long coming? Okay, market goes short and there's no long coming. All right, I think what you're referring to is this buy signal right here. This signal is what we refer to as one of our discretionary signals. It's discretionary because it does not qualify as a high probability signal. The high probability signals tend to print one of these signal prompts. The discretionary signal means exactly that. It's a signal that is left to your discretion. The Raptor parameters have been met, and it says the market condition is bullish. We've produced a buy signal. So now your trade becomes a matter of logistics. Now remember, this is not a high probability signal. The high probability signals are the ones where you're going to have a very good chance of hitting your high probability target. This one does not really even mirror one of our high probability signals. It doesn't look like a cloud crossover. It's not even close to a hard edge for a bounce. But let's say you're looking at your chart and you're saying, the market's in an uptrend, I want to buy, I want to get in long. Okay, fine. So we're going to get in here. Where are you going to place your stop? Well, there is such a thing as a proper stop loss. Your stop does not go right here. Even though the Raptor, the Hawk, the Falcon, the Eagle are all very good at picking up initial market momentum, they are not perfect tools. They are not right 100% of the time. Therefore, the market may actually pull against you a little bit. And like I said, there is such a thing as a correct stop, as a proper stop. And normally that's 2 swings back. If you can place a stop 2 swings back, you're probably going to be okay. So there's swing number 1. If you wanted, you could say this is swing number 2, although technically I would say this is swing number 2 here. This one's a little too intermediate. So here you are 2 swings back. If you can afford the risk, you would take the trade. If you can't afford the risk and you're in your risk percent mode, trade manager would say, oh, sorry, that's too much money for you. You have to pass on that trade. But if you're going to take the trade with anything less than a proper stop, there's going to be a very realistic possibility that you will get stopped out. Now, okay, we're seeing a little bit of a pullback here. The market's going a little bit sideways. We are not stopped out of this trade yet, obviously. So what do I mean by that? Well, I mean that there's still a very good chance that the market will head higher today. So even though on this discretionary signal that we're looking at, the market did not go up immediately, it doesn't mean that there isn't going to be some follow through on the discretionary signal. But especially when you're just starting out, you want to stay with your high probability trades as much as possible. So let's say you were looking at this number 3 signal. And let's say you ignored that, okay, you know, the market's already made 3 legs up. We're kind of going a little, some of the momentum seems to have drained. We're an hour into the session. Let's say you ignore all that and you're just looking to take a trade. And you deem this to be one of your 3 best trading opportunities today, because you're only looking to take 3 trades today, and you say to yourself, yep, Eric, this is going to be one of the 3 best opportunities today. I'm going to take that trade. All right, so there's no real structure here, so at the very least we need to risk it to the hard edge. I don't know why I'm having difficulty with that, but let's do it like this. So I risk the trade at least to the hard edge, and the market's flip-flopping a little bit, and I'm still in this trade, but I haven't gotten to my profit objective just yet. So it's, when you're starting out, you're pretty much going to ignore the discretionary signals. I did take one today just to prove a point, how when you have a trend, an established trend, oh yeah, that's what I was going to do too. I was going to take the next buy signal regardless. Well, that would have been this one right here. Just in favor of the trend, right? Everything else aside, just looking to take a trade with trend, I was going to take the next buy signal, which would have actually been that number 3 signal. And see if we couldn't get it into a profitable position. But now that the buyers have recommitted to the trend, you bring your stops up. Here's another little swing. You could bring your stop up to there. So even if the market reverses and stops me out at this point, I've lost, what's that, maybe $150? Okay, let's just make sure I'm not missing anyone else's question, and then we will. Andrew's asking, Eric, can you send me the Raptor template, as my clouds are very different? Sure. Mine's just the defaults, though. I haven't changed anything on my clouds. I have an 8-tick brick, and it's just the default. So I have a 12 and 8 brick cloud and a 6 brick hawk. So nothing fancy. The only change I did make is on the number 2 signal, the extreme retest, the sensitivity. I have changed to 1.25. But other than that, it's all the default settings. Vincent's asking, have the default settings been found to be the most optimal parameters? Yes, for the vast majority of the markets, the default settings will serve you just fine. The new Raptor allows you more tweakability. The Hawk, the Falcon, and the Eagle, the programming is all locked. The only thing you can change is the brick size. That's the only change you can make. The Raptor, however, you can play with it. So feel free to experiment. Sometimes you can make it a little bit more sensitive to the market that you're trading. However, the default settings, like I said, they'll suit 99% of the markets you're trading. Rick's asking one more question, please. What do the round dots represent? Those are your warning dots. If you have your audio alert on, you will get an audio alert along with the warning dot. That tells you that half of the trade parameters have been met. So it's just to alert you to the possibility of a trade. Once all the trade parameters have been met, you're going to print a triangle and a hash mark. That tells you it's decision time. You need to make up your mind whether or not you're going to try to take the trade or not. Marlene asked, where was that last item you showed? You go to your indicator window, find your Raptor 2.0, and if you scroll about, I guess, 2/3 of the way down, you can adjust your hard edge signal to include a trend confirmation or not. By default, it's set at false, which is fine. Your signal parameters SE, that's your soft edge, buy and sell. That's your number 2 signal. By default, it's set at 1.01. I found that to be a little bit restrictive. 1.25 introduces a few more number 2 signals. The higher this value is, the more number 2 signals you will print, the more counter trend signals you will print. Oops. And I just, with the new data, I just ended up erasing my number 3 signal and printed a bunch of number 2s. But what I was going to point out was on that buy that we were looking at, which was right about here, I think we've got to our profit target. Oh, almost. And once they get above here, well, they're going to try to confirm this signal as well, the buy on that signal. Hey, way to go, Marlene. Marlene says, I just took that with trend signal on the Raptor. Good job. So you're in a profitable position there. Ronald's asking, hi, I'm a guest here. Well, welcome, Ronald. Does the Falcon come with the Raptor? I think you can make arrangements to bundle it with the Raptor, but you will have to talk to Adam about that. So if you don't have Adam's email, I'm sure you do, but just in case, it's adam@indicatorwarehouse.com, and I will send that to everybody. Make sure I spelled it right. Yes. And like I said, I know he will arrange bundles for you if you're interested in other aspects of the software. All right, gang. Have yourselves a wonderful weekend. I will see you again on Monday. If anybody else has any questions, please type quickly. I just don't want to cut you off. Just want to make sure. No questions? All right. Talk to you Monday. Bye for now.